Hi guys, welcome to another video of BTSS Media's Understanding Business. This is a video extension where I was actually talking about when a business can go in for funding, when a business can go in for sellout or exit route. Okay, this is a very simple diagram which I'm going to use it to explain to you how you can understand and plot a situation of your own business. There are many business growth patterns and sell and exit frameworks which are available, but those are for businesses which has a lot of data and which are on a higher scale. If you are a startup, and if you are or if you are not a startup, but if you are actually running a shop, running a business where you don't have access to a lot of data, but you yourself are the decision makers and you want to know when to exit, or whether you want to exit or not, this very simple picture can give you a wonderful example of where you can take your call and what exactly your decision can be. So, to summarize, before going in detail, these are the four blocks which can probably put your business. You can plot your business inside these four blocks at any given point in time. At the axis, we have client, market share, and business. Very simple. Clients represent your customers, your consumers, your buyers, etc. Market share represents how successful you are in categorizing and influencing the people among yourself. Example, if you are a very small tea shop, how much of a pull that you are able to get in that particular area. If there are three tea shops, three tea shop which is available, and 10 people are coming, out of 10 people, how many people are coming to your shop? As simple as that. It can be extended to a cloth shop, it can be extended to as many businesses that you can expect. Okay, so and in the below given axis, I am talking about debt. Basically is structured and unstructured money which you have taken from banks or friends or family or anybody. Next is your working capital. Working capital can be your salary, can be your every intraday expenses or administrative expenses, etc. Government, anything which you need to pay on a daily basis. And financial flow. Financial flow is basically, I am particularly talking about, are you able to make money in this particular in this particular business or not. So financial flow, when I'm talking about, it's not a very big cash flow or fund flow statement, etc., etc. It's a very simple, are you making money, yes or no. If you are making a lot of money, then you are here. If you are making less money, you are here. Okay. So if you are probably seeing how we should be able to compare it, I'll take you scenario one by one. Okay, so at the first instance, you are just starting a business. You will be in this zone where your debt will be zero or debt will be very less, and your clients will be very less also. In that zone, if at all you want to raise funds, and if somebody is going to come and ask you saying that, hey, I like your business, I want to take over your business, sell the company and go, you will be in this zone. You will be in this zone. So being in this zone, I would probably say that do not take much of a stand of selling your company, because you haven't seen whether your business is actually going to grow or not. While you are in the early startup stage, one advantage that you have is that you have enough time for you to do a trial and error. So your client market share or business may be low, but one of the problem that you may actually face is that the revenue recurrence will take a lot of time. So which means your debt or working capital burden in your business will be very heavy, and as the day goes, the heaviness will increase. So that's where I particularly suggest in this phase, unless until you are in a business where there is absolutely no growth at all, and luckily, if you are in the part of vertical or horizontal diversification of a big brand, and if they are planning to integrate your software, hardware, services, or assets into their portfolio, you can plan for an exit. Otherwise, this area, I would probably say that you should probably seek funding and go towards the next area, possibly to this area. This is where is your next organic growth. You will have it where you should increase the clientele, you should increase the market share of your business. At the same time, you should probably keep your debt or working capital intact. Keeping it intact or keeping making a little bit of money during the process is a key. This is the stage where you will be able to expose your brand to the outside world as if it's one of the good prospective Series A or Series B or Series C, or maybe some kind of a private equity investment, things like that. So this is a stage where probably you will break even. This is a stage where probably you will break even. At the same time, this is a stage where you may probably also look into various products and services that can expand your network. So in that way, this is a area where your business actually grows. Okay, where you keep the debt intact and your profitability will also be decent. Okay, and when I'm talking about decent profitability, it is making from your own money. I'm not exactly talking about bootstrapping, but I'm talking about with very limited exposure from outside. Okay, so here, if somebody comes and tells you that, I'm really interested in this zone, I'm really interested in taking over your company, your EBITDA will be very good. So this is the prospective area where, if you are a buyer, okay, for a second, let's think yourself not as a seller, but you as a buyer. This is the area which I would like to get inside. So every buyer will be looking into buying companies who are into this zone. Okay. So this is a zone which gets most of the offers from buyout offers from the investors. Okay. So in this zone, it's purely a gamble. It is purely a gamble. If I have a company in this zone, I will probably look into couple of points before I make a decision. Number one, will I have an opportunity to have the same kind of a client growth? Okay, even after a couple of years down the line, 3 to 5 years down the line. Number one, will I be able to maintain the same level of debt, working capital, or financial flow, and maintain the profitability ratio? If I feel that the client may not increase, or the client may increase but the profitability will not be that good, or if I am not able to increase the profitability even after keeping my debt and financial flow in control, I will exit. But if I am in this zone where I still feel that there is a lot of client extension which is available for next 3 to 5 years period, and my debt is only this, so I have a leverage of a lot of debt gap is also there. So in that phase, if I am somewhere around here or somewhere around here, okay, I will probably say that, yes, I think I will take a gamble. Let me raise a funding, and I want to move from here to here. Okay, from here to here. And when I'm here, if I'm hoping that somebody will come and ask my company for a buyout. Okay, this is another scenario. The next scenario is, you have put in a lot of investment, and at the same time, okay, there is a lot of businesses also which is growing. Lot of debt is there, working capital is there, private equities have been inside your portfolio for a very long time, your client market share is very high. Okay, but your profitability is not that good. If that is the case, sell it off. Sell it off. In this zone, it is purely a gamble. It is purely a gamble. You will have to worry about whether you will be able to work on this zone with, because the client extension is coming to an end. Unless until you are going to derive a new set of target audience, you are not going to make much of a money. Unless until you are going to come back and then work on your debt restructuring, and then like pull your debt back here, and then get your company back here, okay, then it will be good. But as you are going here, you are actually exceeding the limitation. Yes, you are the market share leader, no doubt about it, absolutely not an issue. You have enough clients to make you one of the celebrities, you have good business rolling out, banks will be ready to fund you, everything is fine. Do you have a future with exactly what businesses are you running right now, or do you have to invent yourself? Okay, this is a phase where, again, if I am a person who, if I have a company somewhere here or here, I will wait for some more chances. If I have a company somewhere here, I will knock it off, I will definitely knock it off. And this is a zone which, unfortunately, most of the famous brands that you are looking into, the most of heavily invested brands, heavily funded brands, all those people are here right now. The problem with all those people is they are very famous, so their clientele is decent, their market share is decent. At the same time, the way that they have managed their finances, the way that they have accumulated debt, the way that they have raised series of funding, it's they have no other choice. They are actually waiting for somebody to buy, because with such a low debt, with such a low clientele, and if the debt is extremely high, you will not be able to get money more. At the same time, you will not be able to increase your market share also, because market share increase needs money, flow of money. This is where you would like to bring your cost down, and then try to put your company somewhere here by laying off this, that, everything, or somewhere by this you would want to knock off your regular cost exposure and try to bring your company somewhere here, because this is a zone where the company has gone out of your hand. It Don't think that this can happen only for a bigger company, absolutely not. This can happen very fast, even for a startup company. I have personally advised companies, I have been mentoring companies, I we have been successfully implementing strategies to bring companies from here to here. We have got tremendous success in bringing companies from here to here. Okay, so doesn't mean it's only a sellout which will work. Okay, we have redefined their strategies. We have knocked off few of their products which are not performing. We have reinvented their client portfolio. We have reinvented their client personas, and then we have brought them from here to here. At the same time, we have also advised companies who are in this zone or in this zone to sell it off. We ourselves have coordinated and consulted a couple of M&A projects, where M&A services, where we made the owner of the company aware that now you don't have anything in control. Okay, either you will have to bring it down to here, or you will have to from here to here, otherwise sell it off. So if you are a small business owner, and if you do not have a big consultants who are advising you, with this, just with this image, with this matrix, okay, you will be able to understand what is your decision making strategy that you can be. You don't have to hire any consultant. This is a very easy diagram which you can understand. So whether it is going to be a very small shop, or it's going to be a startup in IT space, or any domain for that matter, this small matrix can help you understand what you will be able to do when it comes to whether it is a sellout strategy or a funding and growth strategy. If you want somebody to consult you, I'll be very open and very happy to help you out. Send me a buzz, send me a message. We'll be very happy to work along with you. This is Satish Sampath from BTSS Media signing off. Thank you very much. I'll meet you in the next video. Take care.